Hi, welcome aboard the Strate𝔾 Channel, in which we discuss the markets from a supermarket context all the way down to the daily noise. This is no financial advice whatsoever, so take it educationally. First, let's have a look at the Bitcoin chart ranging from 2009 up to 2024. Comparing it with Google in its first 4 years, basically the first 4 halvings of Bitcoin compared to Google in its first 4 years. Okay, so on inception there was a huge rally for Bitcoin. The 1 encircled, then the 2 encircled followed, a huge correction as well. Then a large extended 3 wave to the 3 encircled. Then 4 encircled, the bear market of 2008 and 18. And then finally the move up since 2019. So here we have the COVID dip, the red move, the 2 between brackets is basically the COVID dip. And what we see is that when you zoom in on the smaller scale, we have 1, 2, 3, 4 and 5 is missing. Then I drew a line through the 1 encircled and 3 encircled, and that's also the target for the 5 encircled, which lies at around 200k, when the top will be around a halving, this 4th halving. Then when we look at the 2 encircled, 3 encircled, it's an extended 3 wave, which means it's composed of 5 waves itself. And I gave it a cyan 1 between brackets, 2 between brackets, 3, 4, 5 between brackets. And the 2 between brackets and the 3 between brackets as well contains extended 3 wave, which is the dark blue one. So 1, 2, 3, 4, 5. Okay, and when we look at the first 4 years of Google, we can find the exact same structure. So first a move up to 1 encircled, 2 encircled, 3 encircled, 4 encircled, 5 encircled. Then the last in red move can be divided in 1, 2, 3, 4, 5 waves. This 3 and between brackets should be at this top. So because this top is this wave starts here with 1, 2, 3, 4, 5, and that's basically also a double extended 3 wave in this sense. So what I'm expecting is basically this 4 to 5 in red to play out for Bitcoin as well to the green line. As you can see through the 1 encircled and 3 encircled, the target is on this chart 5 encircled. Okay, so this is on a logarithmic scale and the symmetrical log scale, because then moves from say $0 to $10 makes sense, and the structure of that still makes sense at this moment. And also exponential growth can be shown this way in a linear fashion. Well, I think it's obvious this. A lot of people ask me, why would you compare Google? Why? Because Google also started very small and exploded exponentially. And what I like to show is that the Elliott wave theory, that it most often follows exact same patterns, and that's what I like to show here. So feel free to compare them yourself. I've also looked a bit further. When we zoom out what happened after 2008 with Google, it was not the end of the world, obviously, and what we see is that there was a large V-shaped recovery which took years, because this is the first 4 years, and because this time scale is as well on a log basis. This range here is the next 16 years. So this is about until 2012 or 11 maybe, before we were back at the all-time high. Well, if Bitcoin would follow this exact same structure, there would be a huge correction of this first wave up from an Elliott wave perspective. And we have here this wave up with the final impulse which I expect, and then maybe around the halving there will be a big correction. There should of course be a big event in the financial markets to trigger something like this, but I like to show further in my video how the financial markets are heading at a big recession, and so things are lining up at the moment. Well, this would mean if it would, of course this is a speculative trajectory which I've drawn, but it's based on this one and also on the same scale. So the first 4 years of Bitcoin contain the first big impulse, and then the next impulse will be, well, this was basically the shakeout of the century, and then the largest scale move comes in. So it would mean that it would take about 4 halvings before Bitcoin would be back, 4 to 5 halvings before Bitcoin would be back at its all-time high around 200k. And 4 to 5 halvings is about 20 years, so that would be in 2044. And if we move further up by then, if Bitcoin has never had a recession, of course, so we'll see if it survives this huge shakeout. But it may, at the end of the century, because it's on a log scale, this is a multi-million asset per Bitcoin. So every Bitcoin about $10 million at the end of the century. So 2092 at the 20th halving. So basically a comparison between the first 20 years of Google, 2004 until 2024, and 2009 to 2092. So the first 20 halvings. Okay, so this is what I wanted to start with. Obviously, a lot of people would ask, why would Bitcoin pump already before the halving? Last time it always pumped after the halving, right? So, well, I looked at the recovery of the previous bear markets and at which point Bitcoin currently is. So if we take the top of before each bear market and the bottom of the bear market, then the Fibonacci retracement back to the 61%, 78%. Always see it wick into this green zone and then testing it back, and never close a monthly candle below the 61.8% level. So here it wicks into, it tests it several times, and then the bull market starts. So, well, this hand points at where the price has wicked into this region and tested the 61 level. Okay, so for the second bear market, huge bear market, well, in 2015 from the 2013 top, we can see when it recovers, it wicks into the green zone, tests it for a month or two, and then the parabola goes off. Well, each time the hand is at the halving or after the halving, as you can see. So after this halving, we see first a correction for a few months, and then the parabola starts to kick in. Okay, also for this one, we see price first wick in, and then the COVID dip, and then another try, and test basically this 61 level again. And when it's successful, the parabola starts, and then within a few months, the top of the parabola is reached already. Currently, price has already wicked way before the halving into this zone, and is currently, if we zoom in here, has tested this 61 level exactly here, and is currently bouncing off these lows and ready to already push this parabola. So that's something I would like to show, that this points, because this hand is way before the next halving in end of April this year. So end of April would be basically here, 1st of May, 22 of April the next halving will be. This the parabola has some well, there's place for it to play out like this. Okay. Well, you might be wondering, why would Bitcoin pump within 2 months to 200k? All right. So what I want to show is that after the bounce of each bear market low up to the top, there are basically 2 big struggles within the move up. The first struggle lies around the green zone, which I already discussed. And when price breaks above it parabolically, it pumps to the 1.618 level. Then there's a huge struggle for several months to break this zone and pump through to the 2.272 extension of this bear market. So this is the 100% level, and this is the 227.2% level. Well, if you look at the second big bear market, and we apply the same rule, we can see also the green zone was for multiple months a huge resistance to break. And when it gets broken, price parabolically flies to the 1.618 zone. Has some resistance here, but basically goes through immediately. But there's a struggle here. Then at this cycle, starting at the 2017 top to the 2018 bear market bottom, if we apply this the same, we have a longer cycle, and this is the 1, 2, 3, 4, 5 wave I expect. So for me, this is one big wave up, and what you can see also, the green zone, it took about a year to overcome this really strong, with even a dip to 4,000 here during COVID. It took years about a year to break this zone, and then took off parabolically to the 65k level. After that, we had a big correction, and then another test of this 1.618 region. And this is the 69k top, and then Bitcoin all the way dropped back to 15k. It didn't invalidate this 1, 2, 3, 4, 5, because then this level should have dropped into the 13.8k top here before the COVID dip, which it didn't. And therefore I'm expecting this final wave up, breaking through the 1.618 level, and when it breaks through, it takes about 1, 2, 3 or 1, 2 months before the 2.272 level is reached, which lies exactly at 209k. Okay, so this is basically another reason why I'm expecting this wave up to break out before the halving at the end of April. So that's basically still 3 months to go, and we need to break this 1.618 level again. But when it does, it fires right within a few months to the top. Okay. Well, when zooming in on the price action since the November 22 dip to about 15.4k, we see another Elliott wave structure on a smaller time frame. So first we have 5 waves up here since the bottom, then a sideways correction ABC, and currently we have this 1 encircled, 2 encircled, then we are on the way to the 3 encircled, and most often the 2 encircled to 3 encircled, the third wave, is larger than the first wave. So that's why I'm expecting first a pump to about an all-time high, then a correction to test the previous all-time highs, and then a final blow-off wave to 200k before the halving in April this year. Also, if we look at this smaller, this small example of a parabolic curve, it consists often about 3 bases. So if we take this as the first base, this the second, this the third base, then when price bounces from this end of the base 3, it doubles in a very short time of and well, if we look here, it's 25k and we almost reached 50k already. So this is quite a short time to double for Bitcoin in price. So, well, that already played out, but I'm expecting this move to 200k, and it still fits very well within this parabola. Of course, this structure is to show what kind of waves I'm expecting. So another larger time frame correction like this red one of a higher order, and then a final blow off of about the same order of these smaller waves up. How the exact structure will play out, I of course don't know. It could be like this, of course. This 5 wave could be, the top could be lower, and so on. But the point is that I'm expecting this 5 wave to play out within 5 subwaves itself, and that it's setting up for another big wave up at this moment. Well, are other risk on assets like Bitcoin blowing off? When looking at the stock market, the S&P 500 is printing for already 3 weeks in a row all-time highs and closing at the higher levels each week. So this is a very strong move above the previous all-time high. I'm tracking this cup with handle already since here, and we had a sort of shakeout here, and price bounced very strongly and broke the all-time high. So stocks are setting up to rally to about 6,000 here for the S&P 500, and this is also the level. If you extend a trend line through the 1929 top before the 85% correction back then, the Great Depression, and the 2000 top, a line through those 2 points lies currently here. So that would be a huge resistance there, and also a good reason for stocks to blow off and basically enter the next recession here. During recessions, the Fed always cuts rates. Recessions are those vertical gray bars. So here we have one in 2000, in 2008, and during the COVID we had a very small recession. But what you see is that the Fed, within a few months, all the way back to 0 with their Fed rate. Okay, so that's nice to see. An observation that during strong recessions, the Fed cuts rates. The Fed is expected to start cutting rates this year, and they've hinted they won't cut rates already in March because the job market is still very strong. But what we can see is this plateau of the Fed pausing until the job market basically starts struggling, and then when the recession kicks in, they decrease very strongly their interest rate. Okay, so that's a nice observation that at this moment, before the COVID dip, we had also until about June 2019, we had a plateau, and then when the Fed started to cut rates, it was basically the sign of getting out of the market. Also here in 2000, in 2008, and also even in 1990, we had a bit of a plateau here, not that obvious as the last 3 times. But it basically means be careful, because in February and in March, the Fed is likely to cut their rates or to pause their rates and start cutting rates later this year. And when they start, that will introduce the next recession, in my opinion. Then, if we look at the yield spread, which is a measure of bonds, long-term bonds minus less long-term bonds or short-term bonds. Well, when it's below zero, when it inverts below zero, that's a sign which always occurs shortly before a recession. So here we had it in 1990, in 2000, 2008, before the COVID dip, a very small one, so a very small recession follows. And currently we have inverted since the start of 2022, and we're still inverted. So this is a very strong signal for a very strong recession. Maybe even stronger than the 2008 recession. And when does the recession often kick in? Well, when this yield spread breaks back above zero. And here you can see about 0.5, here at 0.9, and during the COVID dip already at 0.3. So this is something I'm closely watching, because the recession would really around the corner when this reverses back above zero. There's not a lot changed for altcoins, so I refer back to my previous video for that. Also, feel free to have a look at my website and join my ecosystem. You can do it by clicking on join and go through a free plan, a paid plan, a group plan, or a gift paid plan. And all those points here are also at the top. So the updates, you can click there and go there. The channel is basically this video series, so it's also for free. The trades, well, everything is here, so please have a look and consider to join. For free, there's already a lot of information also about altcoins. I update it every week. So feel free to join. Be welcome.